Hello, welcome to the European Open Briefing for Friday, June the 2nd. I'm Rafik Bayajan, currency analyst at xm.com, and we're going to be looking at the latest developments in the currency markets today. So it is a rather quiet end to the week, although we are seeing much improved risk sentiment this morning. This comes after strong data out of the US yesterday, which has lifted the dollar to a one-week high. We're also seeing a big boost in global equities. Yesterday, all the main US indices closed at record highs, and we had a strong start in Asian markets this morning. And this follows on from, apart from the US data, we also had strong numbers out of the Eurozone and Japan recently as well. And all of this has pushed gold to one-week lows. The pound, as we get closer to next week's general election, is steadier this morning, despite conflicting poll results. But in commodities, oil has slipped to three-week lows due to a number of factors, one of which was the US's decision to withdraw from the Paris Climate Agreement. But let's start with the dollar-yen pair. We can see here in the chart that it has been steadily rising since late Wednesday. It hit a one-week high earlier today, currently trading at 111.56. Yesterday we had the ADP employment report. That's a private jobs survey, and it showed private sector payrolls increased by 253,000 in May. That was above expectations, and it suggests that the non-farm payrolls report, the official numbers out later today, will also be positive, and that would pretty much confirm the fact that the Fed will probably raise rates in June. Apart from the ADP, we also had better than expected ISM manufacturing PMI, which came in at 54.9, above expectations of 54.5. And all of this has boosted global stock markets. We saw the Dow Jones, the Nasdaq, and the S&P 500 yesterday. All of them closed at record levels, and we're seeing Asian stock markets this morning rise to two-year highs, and also we've seeing a strong open in the European stock markets as well. Moving on to the pound now, because the pound has been, although it has been trending pretty much in a range, we're seeing quite a few ups and downs in sterling against the dollar especially. It's currently trading in the upper 1.28 to 1.29 range, and this is mainly due to conflicting poll results, some of which have been showing bad results for the Conservatives, others of which have showing that Conservatives still have a decent enough lead over the Labour opposition party. And of course the markets want Theresa May and the Conservative Party to win on the June 8th general election, because this is seen as leading to the best Brexit outcome, as they see May as a better, stronger negotiator with Brussels. We did have the latest YouGov poll was pretty bad, though. It put the Conservatives with a just 3-point lead, but another poll suggests that Conservatives could gain 32 seats, with Labour losing 26. We also had manufacturing PMI out of the UK yesterday. That was, although it was down from the prior month, it still managed to beat expectations, so that did also provide some support for sterling. But overall, it seems that traders are now overlooking all the various different polls, and they're betting that the Conservatives, although they may not win the big enough majority as was expected when the election campaign started, most analysts still see a strong enough majority for the Conservatives at the election. Moving on to commodities, we can see here the purple chart. That's gold. It has been drifting lower, and that corresponds with the dollar-yen uptrend. It hit a one-week low, $1,258.60 an ounce late yesterday, due to the stronger dollar and due to the improving risk sentiment in financial markets. But oil is also down. We had bigger than expected drawdown in US crude stocks according to the official energy information administration out from the US yesterday, but this was accompanied by data showing that US oil exports actually reached record levels at 1.3 million barrels a day last week. And so despite that initial spike in oil prices, here we can see in the yellow chart, there was a brief spike, but then since then it actually drifted lower. And further weighing on oil prices is rising output from Libya and Nigeria. Of course, both countries are exempt from the OPEC cuts because previously they had supply disruptions. And adding to that was President Trump's announcement yesterday that he is withdrawing the US from the Paris Climate Change Agreement. And this has led to expectations that we will see a big increase in US drilling, and we know that Trump supports giving more permits for US energy companies to drill, and this potentially would lead to higher production out of the US, and that would potentially damage OPEC's efforts to rebalance the market. Moving on to today's economic calendar, let's just have a quick look at yesterday's data from the US. We saw the ADP national employment figures coming in at 253 versus 185 expected. We also had the better than expected ISM manufacturing PMI. Construction spending was a little bit weaker. And we also had the market final manufacturing PMI, which was revised slightly up in the final reading. So all of this leads to strong expectations for today's non-farm payrolls numbers. They're expected to come in at 185,000. That's down from April's 211,000. Average earnings is expected to rise by 0.2% month on month. That would still, that's not really much. So I guess the average earnings will get a bigger focus because the Fed wants to see higher wage growth before it can be more confident about inflation. But apart from the non-farm payrolls numbers, everything else is going to be pretty quiet. We just have the Eurozone producer prices coming up shortly, and the UK construction PMI, and Canadian and US trade figures. We're also going to have Philadelphia Fed President Patrick Harker speaking at 16:45 GMT. That's it from me. Thank you very much for watching, and have a great day.